Hey, what's happening, everybody? Happy Friday. Welcome back to the Pulver Report. It is 9 o'clock on the 13th. Happy Friday the 13th. Oh boy, what's the market have in store for us today? If you're superstitious, that's probably not a good.
If you're using useless retail trading charts like this, please
Do the charts. Everybody, happy Friday. We're looking at the SPY. Pre-market, we're up about $5. We had a bit of a rescue yesterday, led by tech. NASDAQ started to come back a little bit to close out the day on a positive note. Looking at a couple of things where we finished yesterday, NASDAQ was up 0.06 after fighting back. The S&P, a big indecision candle, finished 0.13% in the red. That was because of a gap lower. The Dow finished negative 0.33. The 10 years down to 2.85. That's 5.8 basis points. Bitcoin hanging tough, bouncing back at 30K. We're sitting at 3650. So a nice little indecision candle from yesterday's trading day. We'll see what this is made of. We had lows stretching down to 25,430. Let's take a look at, I'm going to look at total here, which is just our crypto market cap. One thing that is a little wild and crazy, look at this for the past what? This is 1, 2, 3, 4, 5, 6. And we know that if we go to the weekly chart, you're going to see 6 weeks of a crypto meltdown. Long wick to the south, which is a good sign, especially off of this exponential moving average cluster. I'm liking that. We came back into base around these 2021 lows. Is that enough? Are we gonna, have this long wick to the south? This is what I could see price doing, by the way. If we are going to cement a little bit more of a low, I could see price having this sharp move down, working its way back up, and then slowly coming back to retest. And it's going to be super important that if we retest the lows, I'm not drawing that very well, if we come back in and retest the lows and we do not take out the lows, that we end up putting in a bottom on crypto. If we come in and take out the lows, as long as we see some noticeable divergence, that's what I'd like to see for a potential bottoming formation as well. So given the last 6 weeks, I know that we still have a couple more weeks in May, right? So talking to a good friend of mine this week, and I don't know why we would think like, oh, May 12th, that was a perfect turning point in the market. I don't think that's the case. May 13th, that's a perfect turning point in the market. I don't think that's the case. We still have all of next week, all of the following week to see what May is going to give us, right? Now, there's a saying, sell in May, go away. Usually what that means is the end of May, the markets start to, pause, sell off, maybe some profit taking, and then go dormant for the summer. This has not been that year. Okay, this has been the year of holy crap, what is happening? Everything is in the red. Everything feels like a dumpster fire, and there's no stock is safe, no FANG stock is safe, no index is safe, no bond is safe, no crypto is safe. I actually am going to read up on some insights on Luna and Terra, some of those stable coins that just crashed this week. Funny, well, not funny. This is terrible. If you put yourself in the wealthiest shoes, you'd probably hate it too. The ultra wealthy stash their riches in financial assets like stocks or wealth is correlated with the market's performance. And while stocks usually go up right now, they're crashing. Fortunes of Elon Musk, Jeff Bezos, Mark Zuckerberg each dropped by more than $50 billion as big tech shrinks to medium tech. This is what caught me. Coinbase CEO Brian Armstrong's net worth plummeted 84%. Could you imagine that? You're worth $100 billion. Now you're worth 16. I mean, again, still a B. That's not bad. Shangpeng Zhao from Binance. Bank account dwindles from 96 billion to less than 12 billion. Unbelievable. They say cryptos are volatile. It's insane. So, look, I did take some stabs at Bitcoin. I got a couple nice levels. I bought at 35. I bought at 30. I bought at 27.50 or 27,500. I did not buy at 25 because the chart alarm didn't activate. So the low that we had here around 25,400, I didn't buy it. 25,300, I didn't buy it. Okay, but I do have a chart alarm set at 25. I am wondering if this level, because we did take out these lows, right? These 2021 lows here on Bitcoin, but is this enough to kind of show that there is support? And interestingly enough, like we might end up putting in a low, perhaps a cup and handle, a reversal pattern that we like to see in stocks. If we have a cup and handle pattern, something that gives us bullish structure, we might have what was down is now offering the discount. Couple things. I mean, Apple ended up testing, I believe, 20% yesterday. I agree, David. David says no sympathy when the B's. I agree, right? I'd like one B. I'd be fine, right? One B would be good for me. I'll take, 20 M's, 30 M's, but one B would be great. I wouldn't complain. I don't think anybody else would either. So it's just crazy though, right? Like $100 billion to 15. It's more than you ever need by far, but it's just a crazy amount of wealth that is just evaporating. Market cap evaporating, you know. So I wanted to take a look at this. This is Apple. Apple, I think, is a very vulnerable stock right now. We're at 142.56 with a close yesterday. We're pre-market 145.16. What I think is interesting, and I've said this now for the last several months, Apple kind of serves as my benchmark and my safe haven. If Apple is crashing, which we had a low peak yesterday at 24%. So it's a couple interesting spots. The S&P 500 was super, super close, right on that cusp of a 20% dip. Okay, with fangs, but 20% dip. Apple approached that same level at 24%. So if there is noticeable buying on Apple, there's probably going to be noticeable buying in the indices. All right. If there's still more hemorrhaging to the downside in Apple, the indices will follow suit. So until big tech like Google, Amazon, I would say Apple. I mean, I would say those three, like Microsoft, Google, Apple, because they have had the most resiliency compared to Facebook and Netflix. I mean, I think Facebook, Netflix are still quality companies, but major overreaction on, I mean, how many, like 100, I don't want to get the numbers wrong here, but Netflix has like 10 million subscribers or 100 million subscribers. I know that's a huge difference, but the reaction and the selling was they lost 200,000 subscribers. The first time in a decade, by the way. So 71% off the highs on Netflix. I'm buying Netflix. Okay. Trade this week. Coinbase. I don't know if this is a great trade, but I think it is. Pre-market 68.08. I'm going to roll the crap out of my call like ASAP. I did a $60 call for next Friday. If this stock quickly runs to the upside, I'm going to roll, at least by 1 week and see if I can roll it up in time, up in dollars, and see how well I can flip this. Again, I might get really lucky and maybe flip this up towards like $80 to $90. I might try to keep it the same around 60 to 65 and just see what I can collect. So this is going to be an interesting spot. Crazy over sold and 90%, I believe, off the highs. If you go to Coinbase and you have your 420, 430 highs right here, I believe it's 90% off the highs. No big deal. Yep, 90%. So that's wild. And we will see what happens here. We'll see what the survival looks like. And hopefully it survives. I mean, obviously, this is one of the largest crypto exchanges in the world, one of the easiest platforms to get people started on cryptocurrencies. But as they say, not your keys, not your crypto. So it's a part of the process. But if you truly want to own your crypto, then have an off-grid ledger. So Google says 221 million. Okay, so it's like I thought over 100 million, right? 100 million subscribers. They lost 200,000. Big deal. I mean, so like I said, Netflix is an overreaction. That's what we're seeing. So do I think Netflix is still a quality company? Yes, I do. Do I think we can come back into these gaps? Absolutely. Am I trying to lower my cost basis on Netflix? Yes. All the above. Okay. So I am interested in buying, and the mission objective or the main objective is quality over quantity by far, right? There are stocks that will probably never come back, and that's unfortunate. Like Upstart is an example from this week. They're 93% down or something like that. I mean, I'm in Teladoc, which is one of my worst positions, and I don't know if I have any intentions of doing more with it. I can sit here and say like, oh, I'll throw more at it. For what? it could be never coming back. So I'm prepared to have kind of a cleansing in my own portfolio with stocks that are SPAC plays, those special purpose acquisition companies that never amount to anything. Maybe they're buyout targets, but they're not going to be bought out at premiums. I think they're going to be bought out for pennies on the dollar. So there could be, kind of a forced cleansing in everyone's portfolio, and that's something we'd have to tolerate. I don't know what that's going to look like just quite yet. But it also means that if we have quality stocks and companies in our portfolio, those can do well. And I want to make sure that I'm positioning my working capital into those high quality stocks. So anyway, that's that. Just in case anybody's, I'll humor you. Let me see if I have the screenshot here. Let me find it. Equities on demand. Here we go. So this is from Telegram this week, if everyone can see this. This is my to-do list next week. So in stocks and options, my 520 expirations, I've got covered calls, jade lizards, credit spreads on all the accounts that I'm watching. So it's a lot. This literally is, I'm going from, A to Z in the portfolio, every account, and it's going to be a really busy week next week. So I embrace it. It's always a challenge. I will probably end up taking some losses on credit spreads. I will end up taking some assignments on stocks that I really like if it's worth it. We might actually have a nice little rally here that gets me into profit by the time we have these 520 expirations. So sorry for the chicken scratch, but that's what I'm looking at for next week. So yeah, equities on demand is going to be very busy, but we will do what we always do. We will grind through the week. Forex wise this week, we had, make sure I've got the right thing. Forex wise this week, we had a stellar day in the JPYs yesterday. So this is the currency strength. The Japanese yen was rocking and rolling finally after, probably making everybody nervous for the last 6 or 7 weeks. It finally rolled over and just ignited some strength. And a lot of these 1, 2, 3 corrections were fulfilled. So what I mean by that is this. Let's go to Aussie yen. Okay. This was almost a perfect measurement from a high low, lower high, lower low right here. This is a 1, 2, 3 wave correction right back down to past resistance becoming support. You could drag a little Fibonacci here and have it almost exactly at that 618 extension, which pulled back around 50% from the low and for weeks. And anyone listening that's in my flex room, back me up on this. Have we not talked about taking these lows and highs, looking at around a 38 to 50% pullback, looking at past resistance becoming support, looking at a 1, 2, 3 correction, and spotting those levels where we need to be protecting profit? Because we have. So I ended up closing Aussie yen for some profit, ended up closing CAD yen for some profit. Dollar yen still hasn't really turned yet. So of the basket, most of them have done a pretty good job heading lower. Swiss yen is one that I'm still watching. Okay, we're just shy of this exponential moving average cluster. I'm still looking to see if we can get a pullback. I don't want to pull back on Swiss yen, but I'm looking to see if we can come down to this low at 124 and just find the 2022 yearly pivot, which is around 123. It is sitting at 122.90. I'm going to write this on the chart, 122.90, not the interval, the text box, 122.90 yearly pivot. That would be a fantastic spot for profit. My break even on this is around 126 right now. I would take 310 pips all day right now. Okay, so I am curious how this plays out. If we have a high to low, lower high, lower low, lower high, lower low, and we come in to challenge this level, come down to find this yearly pivot, that would be pretty excellent. Okay. Daniel, yes, dollar yen, euro yen made some pips this week. Very good. We had a trader, Steven in our flex trading room, crushed it this week on some yen crosses. I know that he was in a little bit early and a little bit heavy, but was kind enough to share his experiences and his results, and ended up making thousands of dollars, thousands of pips, and really happy for any trader, of course, that's making profits, especially when it hasn't been a pleasant experience, right? The yens have not been fun. Look at this. I mean, the Swiss yen here, March to April. I mean, for literally a month, you're watching this thing go up just uninhibited, completely reckless, completely irrational. And yet we come back in and start to rebalance. So I would love to see the Swiss continue to do what I'm planning on, which is trying to get this thing. Come on, CAD Swiss, give me a pullback, would you? I'm trying to get Euro Swiss up towards these fresh highs around 105 and change, try to get this yearly pivot, try to hit these pockets and this pivot cluster. We have a monthly and a yearly pivot cluster between 106.20 and 106.50, past support around 107. I've already projected a head and shoulders move that if we end up bouncing here, which would be, going into next week's trading. If we have a cup and handle where we're bouncing here and we start to make our way to fresh highs, I'm still projecting to move towards 108. So I'm of course, going to be excited if we get it to this 106.20, 106.50 area. That'll be a nice profit level. Pound CAD, pound Swiss, some of my favorites. I'm also long on pound Aussie. We took a trade on Euro pound this week that I'm it's the trade's fine. I'm not really worried about it. If this is just a retest, right? If we have lows right here, we are right out like a whisker away from that yearly pivot, like a pip or two away, and we took a 70 pip, what was intended to be kind of a scalp. I just missed my exit. I was focused, yesterday morning on the yen crosses. I saw that I didn't. I needed to wake up at 2 or 3 in the morning to take that trade off the table. Um, my chart alarm didn't go off, so that's why I wasn't, closing out the trade. I would have closed it out on my phone. Doesn't really matter. I'm still in the trade. If we end up having a break, a retest, okay, we retest this area, stabilize a little bit, and then head higher, we can head up to where this whole thing started, around 87 and change. So I will be happy if we come back to the yearly pivot officially. That'd be about 70 pips to the upside. If we were filled back in this pocket area, which is around 84.65, we have two small entries in, and then I'll just kind of wait and see what happens next. So a couple of trades that were looking pretty good this week. Yep, thanks Donna. Yeah, if everyone's taking a look and watching, check out that thumbs up button. Go ahead and hit that for me. Cool. Let's go to some other stuff. Any other forex pairs you want me to take a look at? So the yen, let's go to today. I mean, it's Friday. Things are going to look a little different than yesterday. We had a lot of volatility yesterday, and today things are on the quiet side. The JPY is stalling a little bit, giving back some of its strength from yesterday. Everything else is pretty clustered. Aussie on top, CAD making a run, Swiss in the middle. Everything's kind of chunked here at baseline. So again, fairly quiet day in forex. We're not at the end of the month yet. We still have 2 whole weeks of trading. And technically, we go all the way into a fresh week here to end on a Tuesday, which is, it's interesting to see how the market behaves sometimes end of the month, especially as we go into end of May, go into summer trading. What does that look like? Do we start to get tops and bottoms in the middle of May? Usually it doesn't happen. So I will be watching everything carefully next week. I'm looking to see if the JPY is like a one and done correction and we start doing something different. It's really going to be all eyes in the stock market to see, how aggressive is the market going to continue to price in bad stuff. I mean, this week was horrible, right? If you were watching stocks this week, it was a stressful week. It didn't feel like there was anything you could do. And this is what really made me mad. I was watching, okay, so the stock market's sliding, right? Everything's dropping. And my volatility plays were barely moving. Look at this. This is the VIXY. It didn't make new highs, right? We made fresh lows on stocks, fresh lows on indices. We tested that 20% on the S&P 500, and the VIXY didn't even jump. The volatility index, the VIX, didn't even jump. We didn't make fresh highs. So that's perplexing to have it feel like it's so bad, and yet volatility really didn't go unhinged. So what does that mean? I don't know. I mean, clearly there's not enough volatility to have the fear gauge going higher. I wonder if we are kind of turning that corner a little bit. I'm not saying there's going to be like aggressive buying, but I do think that you have so many companies on sale. If you are an investor, things are on sale. If you have cash, things are on sale. And I'm talking like, 2 years. Like obviously 2 years ago during March 2020 when we had a COVID crash, that was offering like an 8 to 10 year discount on most stocks. So fast forward 2 years later, and we've just imploded on the entire market. I mean, I saw that there was like 85% of the entire stock market was below its 200 simple moving average. That's insane. That is bear market written all over everything. Okay. So things are on sale. And I'm not saying that we just automatically recover to go to bullish territory and this bear market's done, because it's not. But I do think that a capitulation move was the vibe this week. And when I say capitulation, I mean that very aggressive, right? That very aggressive move to the downside where we gapped, we faded, and this all was pretty evident from last week's FOMC. FOMC was this big pump up, and it faded down and just kept going. And we are at fresh lows. So we have a whole trading day today. It's Friday the 13th. Let's see what it looks like. Okay. But I am of the mindset that if there are quality companies out there that are 30, 40, 50 plus % off the highs, look at the structure. Does it make sense to buy? Does it make sense to start buying? I like to start buying with credit spreads. I want to have that long put insurance as my backup plan. And this is an example. Traders that were with me this week in Coinbase, I mean, I closed an $85 long put. That's one of my biggest long puts I've ever closed out. And this is my assignment price. So I was assigned this week at the 145. I took $2 on the original credit spread. I collected 85.10 on the long put. My break even's 57.90. I also sold for $2.35. Let me confirm it's like 215 or 230. Let me check my covered call. And I put in a $60 call for next week. Let me go to coin right here. There it was. So Coinbase right here. I was filled at 216 on a covered call for $60. So that lowers my cost even more. So 2.16. I own my Coinbase shares after a 145 assignment. I own my shares at 55.74. Price right now is up to $68. Now, did I do myself a disservice by covering? I mean, in a way, yes. I kind of limited my upside potential here because what I could do is I own the shares. I could just close this right now and make, $13 a share and walk away with $1,300. And I just rode this thing down for a huge, again, for the week that it was. And I was in the trade for a couple weeks, but for the couple weeks that it was with just a massive meltdown, I'm pretty happy that I'm not sitting here like, oh, my break even's $200 on Coinbase. I mean, I lowered the cost pretty much like tick for tick, dollar for dollar with the fall. So what I'm going to look to do, and we'll talk about it today at the top of the hour in Equities on Demand, is I'm going to look to roll this. I already put in the call. I don't think I can roll it yet until 8 minutes from now. But here is my $60 call. If I look at a roll situation, and maybe I don't have to do anything, right? But if I roll it out to, let's go to next week. If I kept it at $60, I'm going to see if I can just grab a ton of credit. So I could lower my cost, keep it at $60 for next week, and grab another $1.90 out of this. I mean, for right now, like that's totally fine. Now, could I roll it up? Could I roll it up to $65 and collect anything? I could do a roll up to 64, and that's going to be a small debit. 63. The spreads are obviously a little bit wider. That's still a debit though. Let's go 62. I just want to see what I can get away with. So I could roll it up to $62 and collect another dollar, which gives me a total of, that would add $3.05 to my bottom line. I could just do that by going out 2 weeks. So I got to the 27th, rolled up to $62 and collect an extra $1.05. In the situation that I'm in, I'm okay with that. That would add $3.05 to my bottom line. My break even would be 52 and change, and my takeaway would be 62. Even if the stock price goes to $80, I lose it at 62. I'll still make $1,000 in profit on those shares. So I'm going to try to go ahead and fill this at $1.05. If it takes, I'll be out to the 27th, which is the end of the month. We'll see if a little recovery here. If it goes up higher, I can always roll it out to something in June as well and collect even more premium. So let me go ahead and review and see if I can fill this. I don't know if it's going to fill until the top of the or until 9:30 when the market opens, but I'll keep it pending. So actually, let me cancel this. I'm going to see if these premiums improve, because one thing that brokers will do is they'll fill me at like usually the bare minimum, and if I just wait until the options market readjusts, like this might be trading for a little bit more. So let me cancel this for just a smidge, and let's look at this together at 9:30, if you don't mind. If you want to take a look at it with me, that would be fun, because I want to see if I can get that thing ready to roll, just like bean footage. All right, let me get logged in here. Let's see, up about 17 pips on dollar yen, getting ready to take profit. Yep, I'll look at dollar yen, sure. Just give me a second to log in here. I want to have this thing ready for 9:30. Okay, so I will be watching this, get ready for coin, and I'm going to see what the calls are trading for. Like, I mean, look at this right there. Like, I could go out to June 17th, sell a $60 call, and lower my cost by $11. That's insane. Now, again, am I willing to hang on to Coinbase for another month? That is the question. Now, $60, and I lower my cost. I'm right now break even at like 55. I could lower this down to 44 and still lose it at $60 by June 17th. Now, I would rather kind of play the game of this, right? Like I collected $2, this is now worth $6, but the stock price is up after a nice little rebound pre-market. So I could go out to the 27th, see if that's worth a little bit more on the roll, maybe collect an extra dollar or two, maybe roll this up. So anyway, at 9:30, I'll take a look at this on my options chain. All right, so Daniel, let's take a look at the dollar yen. Dollar yen. Okay, so we came down to tap the monthly pivot. We're on the right-hand side of the trend line. Again, the scariest thing to do, especially on a yen pair, is call the top. I do think that with the dollar index where it is, the euro dollar also has some really oversold conditions. I can see it right here. We have nice divergence. We have oversold. Again, it's at 103.57. We are flirting with these multi-year lows on the weekly and monthly chart. Okay, when we had this test back here in January 2017 during the French election, that was the big fake out where, oh, the euro's going to parity. Okay, I mean, look, maybe this time it is. Maybe the euro is going to parity. I talked about this week in Flex. I'm looking to buy at parity and at 98 and at 96. I'm just going to level in. Okay, I mean, I've got small trades on the dollar index or the euro dollar to go long and stay long. I'm still looking for a fifth wave completion and a three-wave correction. Hasn't happened yet, so I'm still eyeing that. Dollar yen is the exact same thing. Dollar yen has a fifth wave move. Okay, now is it 1, 2, 3, 4, 5? Because that's a massively extended fifth wave. I'm still looking for a 1, 2, 3. Okay, how far does it come back? Well, we have past resistance in here. We have pivot clusters. We have pockets galore. Same thing we saw this week. We just need to see, is the dollar going to make the turn? I don't think that this is going to be dictated by the yen as much as it will be dictated by the dollar. Okay, so if the dollar, and I say if because I'm not sitting here calling the top. I mean, this dollar index, the DXY on the weekly, is still pushing 1, 2, 3, 4, 5, 6 weeks in a row. 6 weeks in a row bullish. We're breaking these highs, and it is pushing relentlessly. We are into overbought conditions for the first time since 2015. All right. This does make for a pretty tricky situation. I would like to think that before this thing just goes unabated to 110 or 115 or comes back to these crazy, mega multi-year highs, which I believe is like back in the 80s. Actually, that's 2000, 2001. Crisis situation. We had this massive run up in crazy appreciation, and then the dollar topped. We had the same thing back here. Crazy run, crazy appreciation. That was back in the 80s, and then the dollar topped. So, I suppose what is a little concerning is we had this bottoming, we had this bottoming. If this is I thought we had a nice range trade on the dollar index. In order to see this come to completion, we need to see this dollar index by the end of the month show a rejection candle. If this month is going to close up above this area, the month of June better come with indecision, and July better be decision bearish. Or we end up having a wick to the north where this is a rejection candle for the month of May, and that gives us the ability to trade this back down into a range. Hasn't happened yet. Haven't crossed any trend lines. I am actively looking to see when that dollar can start to turn. I do think that a turn in the stock market, even near term, could be a turn to the downside on the dollar index. Okay. All right. So sorry, Daniel, I got a little distracted there, but let's go back to your dollar yen. I was kind of tying things together. Let's go dollar yen. So I still like the bar. I still like the. We have a heavy bar count in the daily time frame. We have crazy overextended conditions with divergence at these highs. We're now on the right-hand side of the trend line, right? So we had a nice solid break of the trend line. Doesn't mean that this is the only break. I mean, we could easily come back up to test the backside of the trend line, and then we start to fall again, and we look for a quick 1, 2, 3. See where that comes down to. Past resistance is right here around 124. I think we can come back down to this pivot cluster, which is a monthly cluster with 3 weeks in a row, which is around 122. So I'm trying to hold out for the dollar yen to see if we can come back into that area. I told traders, same thing with a lot of these swings. If you take this low and this high, and we pull back to a 382, we pull back to a 50, that's equilibrium on this move. If we pull back 50% right there, that's around 123.05. So my break even, I think, is around 125 and change. Let me confirm that here. My break even is, survey says 125. 125. So 125. SLB, oh frick yeah, man. Let's go SLB. Give me some stock love today. I hope I lose this stock. I might lose it today at 39.50. If I do, that's great. That would be a flip for about $7 or $8 a share. I want it. I'll be watching Schlumberger today. Schlumberger, I want a hamburger. All right. Anyway, that's a good thing. I'm hoping I'm losing that stock. We've been trying to flip that thing and work it for a while. Dollar yen. Okay, so 129.19. I do have a couple of small orders in. I came down to the smaller time frame yesterday when we saw some really nice strength on the dollar yen, and so I'm looking at a small sell trade, two spots. One is right here at this little pocket level, okay, which we're very close to touching overnight, and then up here at the highs around 131 and change. Small trade, and I'm going to see what this does. I'm not calling the top on dollar yen, right? I know that this might stubbornly make higher highs. We still have 2 more weeks for the month of May, and typically the month of May is pushing in the direction of the trend, path of least resistance. So what we saw yesterday, what we saw the last couple of days on yen crosses was great. But what I'm not seeing yet is the dollar yen showing the same thing. So that is why I think that this is a disconnect from what the yen's doing. This is more of a dollar situation. The dollar, I think, is going to have to be the main driver and catalyst to get this thing lower. Okay. And look at the dollar index. It's, again, fifth wave move, looking for overextended conditions. We have divergence. We have overbought, oversold. It all lines up. But lining up means that we're anticipating, okay, confirming some trend line breaks is what I'm looking for. So we broke the trend line, looking for a retest. If we can hit and reject, I'm looking for a fresh low. Not hard, okay? But I'm going to test this area, backside of the trend line, test the highs, two small trades. I'm still prepared to take this up a little bit higher. I don't want to, but I will. And I'll be waiting. We also still have a really nice bar count on the daily. Okay, SLB 40. Man, don't make me roll this stock again. All right, hang on a sec. Humor me. Let me go into Coinbase for a second. Let me try to roll this bad boy. So I canceled that roll. Let me see if I can get something nice and sexy for this $60 call. So if I roll this, let me see something here. Could I roll this? Could I keep the same expiration? That's going to make me pay a debit for I'm going to have to go another week. So I could grab 527, roll it up to 61. You're going to make me pay for that? Are you kidding me? Come on, man. All right, so I could roll it out to next week and grab $2.40. I'm going to try to do that. I'll just roll it out another week. Let me try to grab 240 credit here. Let's try to grab 245. Fill me at 240. Fill me something. Fill me something good, would you? 230. All right. Again, spreads are a little bit wide. I'm going to see if I can get something solid there. And could I go out even further? Let me see what that looks like. I might cancel that trade and mess around with it a little bit more. So change order, 225. I've got a 240 pending. I'll leave it at 240. I'm going to come back into this and just kind of finesse this a little bit. So I could go out to the 27th. All right, I could go out to maybe the 3rd of June and roll this up. Let me see what $60 pays me here. I mean, go out into June, I mean, that's amazing. I'm going to try to grab, let's just do this. Let's just cancel that. I'm going to try to roll this out by the first part of June. Cancel. Cancel. Now, what I could do is my covered call is probably losing right now. Yeah, it's already down. So I have to roll it. I'm going to have to, try to lose the stock and let it do its thing. So let me see if I roll this. I might go to that first week of June and try to grab like 3 and change. So first week of June is the 3rd. Keep this at $60. I can grab 335. Otherwise, it makes me roll it up to 65, which will be a debit. Even though I get a bunch more profit, it would be like a $4 additional profit. Now I could do 60, grab another 340, and not have to pay anything for it. And I'll keep it there at 60 with the probability of losing the stock. So I'm going to try to get 325. I know I'm going to go on the low side, but I'm trying to get filled on this one. So let me see if I can get a 325 credit to roll this out to June 3rd. Review, take it, fill me at hopefully 3. 25. Don't be a turd, man. All right, I'm going to let that pend. So if that fills, I will have a better break even here. This would be a rolled covered call out to June 3rd, trying to get filled for my 100 shares at $3.25, and that's pending. So that would put my break even at 48.58, and this would still be a rolled call at $60. But that's pending. It hasn't been filled yet, so I'll be watching that today. Okay, worst case scenario is it doesn't roll, and I own the shares at $50 and change. I still have some credit spreads out there that we can mess around with, but I'll still end up flipping this for $4 or $5 a share. But I'm going to see if I can get filled there. If price goes up, that's great. Okay. All right. Anyway, that's Coinbase. SLB, that chart alarm went off. We are making a nice little run on Schlumberger, trading at 40.39. I have a 39.50 call that expires today. I think I'm just going to go ahead and let the stock get called away for profit. Reason why is I'd like to get some margin back and have that dry powder to use. So this is SLB right here. There's my 39.50 call. Now, price is trading at what? 40.45. If I felt saucy, could I go ahead and roll it out by another week and collect more premium? I'm going to see if it's worth it. So I could go out to next week, keep the strike price the same at 39.50. I could collect another 90 cents and lower my cost basis. Now, this would be, I want to lose the stock next week at 39.50. I grab another 90 cents. That would get my total profit. I'm not going to do it yet, but I'm just curious if I go to my break even. And again, if this is like boring you, then, sorry, but this is trading. I'm trying to make some money and get some of these stocks closed up. SLB, if I can grab 90 cents, what would that put me at? So SLB, I've lowered my cost down to 33.20. So if I did another 39.50, so 33.20 minus, let's say, 85 cents to get filled on a rolled covered call, and I lose the stock at 39.50, I can make 7.15. So is that worth it? Of course. If the stock price goes higher, roll it out, grab another 90 cents, make $715 on the shares that I own. Now I can. Here's the chance. There's always pros and cons and trade-offs with options. I know that I'm very confident that today I could lose the stock. Okay, so if I lose the stock today at 39.50, here's what I can decide. Do I want to just take the profit? 39.50 minus 33.20 today. There's a good chance I could take $630 home and also get margin wise like $3,000 back in margin. That's pretty good. Okay, now I could take the chance, go out to next week, lower my cost by 90 cents, keep the strike price the same. As long as price stays relatively bullish, then I lower the cost by 85 to 90 cents and still get it called away at 39.50. But if it goes against me and doesn't close above 39.50, I keep the stock and I don't get any margin back. So I'll think about it, right? Because I've been talking a lot about getting some free capital, getting some working capital, getting some stocks closed up. I think it'd feel nice to have a win, to have a stock called away for some profit and a little recovery across the board. I am certainly not going to complain about. So anyway, it's up to me, right? I get to decide, not you. So I'll think about it. Yeah. So anyway, look, like I said, options, it's a lot of fun. It's fascinating. I would not trade equities any other way. I'm serious. I know a lot of traders out there, not traders, I just know a lot of investors that they don't pay any attention to stocks. They're just like, oh, the markets are down, the markets are up. That's all they pay attention to. They watch their 401ks, they check on their retirement accounts. They let a financial analyst or a financial advisor, certified planning, blah, blah. They let them do the work. All they're going to do is park your money in freaking targeted funds. And again, that's fine, but you're going to be like, I think I talked about on Monday, of the 100 largest 401k custodians in the US, 88 of them are down. And of that 88 out of the large 100, most of them are down double digits, just like the S&P. Just like, so you're essentially going tick for tick, taking all the risk of the index, okay? Which means you're essentially lockstep and correlated with everything that the market's doing versus, again, learning how to trade options just opens up your abilities. It just opens up the way that you can trade, the way you can cost average, the way you can improve your cost basis. And it looks like this. If you can lower your cost basis and you can lose the stock for higher levels, because ultimately stocks have a bullish bias, you increase your profit potential significantly. And that's what I like. So even when the stocks are going lower, I am lowering my cost basis. Then when stocks recover and go higher, I'm trying to call this thing, get it called away, and take profit and increase that sizable win. So it is kind of the best of both worlds, in my opinion, and I would not trade equities any other way. So if you're interested in learning how to trade options, let me know because it's a blast. It's super busy though. I will say it is. I mean, this is if you can see it, it's stuff like this every week. I can't believe how much maintenance there is trading options. You know, watching stock prices, expiration dates, lots of. I mean, you're. It's like playing chess. But it's like, have you ever seen like the grandmasters when they line up like 20 people and they go and play 20 games? That's what it feels like sometimes. Now I probably bring that stuff on myself. Like it doesn't have to be that complicated. You could focus on way less stocks, but we've been pretty active this year because we're trying to make some money, obviously, right? All right, traders. Anything else? We have a nice little robust recovery today. Not going to complain. We're at 397. Let's see what this is made of. You know, it'd be freaking awesome today, Friday the 13th. How about you deliver a gap filler? How about this thing rallies like crazy and delivers a gap filler from Friday to Monday, and this thing comes ripping back here about 2.5 to 3.5%, fill the gap, and all of a sudden people feel a little bit better. Now, maybe that gets faded next week. But if we do put in a bit of a low, I'm not going to complain. I will be working on getting stocks called away, getting back some capital. I'll be looking at next week with a lot more optimism because those 520 expirations could be in great shape. So all the management we have next week for stocks and options and equities on demand could be fantastic. We could have a lot of winning credit spreads, right? We could close out early, avoid a ton of confusion, and just have a great week. So that is what we will do. And then Forex wise, we'll stay the course. I still like the trades I'm in. I'm still watching dollar yen. I'm watching dollar index. Dollar Swiss is at 1.0034. It's again 6-7 weeks straight up bullish. I'm not calling the top on dollar Swiss, but I'm certainly interested. If we stretch to like a ridiculous level like 101, 102, 103, I'm not saying it's impossible. It seems a little far-fetched considering how fast and far we've gone, but look at the weekly time frame. If we stretch any higher, look at this resistance. Okay? Just from sheer technicals. I mean, you can't tell me you're not interested in taking a sell trade right there, because I certainly am. And I've been saying like just buy the dollar Swiss on dips because we did. We bought. We followed the breakout. I held this thing as long as I thought I could, and that was around 98.50 to 99. That's as long as I could hang on to it because I was like, I'm in profit. I'm going to close it. Anyway, I don't know if we stretch a little bit higher, but if we do, 102 is a fantastic level of past resistance, and I think we can hold it, at least in the near term. Look for that fifth wave completion. Look for that ABC correction. So I think the dollar is close. It's not ready yet. Don't force tops. Don't get in too early. Same thing here on pound dollar. I mean, I'm looking at some small trades on pound dollar, 22.25, 1.20, 1.17. Those are great levels where we're talking about 25 to 30-year lows on the pound US dollar. New Zealand dollar, Aussie dollar, same thing. We're talking about some great structural levels to be looking to buy and see some turns on the dollar index. Okay, so yes, let's see what Friday the 13th delivers. Hopefully it's good. Seems like it's okay so far, but they say amateurs open, pros close. So the market is not done. We're just getting started. I would like to see where Bitcoin goes today. It's been nice to see it rally, back above 30K, especially for the week to show a big indecision candle, like a long wick to the south. And we'll see if this comes back and finds this pocket around 33.5, maybe puts in a bottom. We also have a really nice trend line. Let's say this is a rally up, a little pullback, and then break the neckline. We're at new levels. We put in a bit of a low. There's Bitcoin. Again, to the probably disbelief of a lot of watchers out there. I'm not going to say traders. Look, traders trade, but there's probably a lot of disbelief, like, oh, crypto is going in the tank. I mean, the stable coin stuff like Luna, Terra, those are nuts, and I don't know what to make of those, so I'm going to read up on it. But Bitcoin, Ethereum, that's going to be my focus. I still am committed to these levels. I bought some a little bit lower. I didn't get my 25K like I wanted because it didn't fill the alarm, but I'm right there. So I've lowered my cost basis on Bitcoin from this recent chunk. I still own Bitcoin like less than 20K. And hopefully we are, having this conversation in a couple months, maybe in 3-6 months, and we're up to 55,000, maybe higher, right? We'll put all this nonsense behind us. That'd be pretty exciting. And what an emotional roller coaster it will be. But guess what? Welcome to trading. Okay. All right, everybody. I'm going to let you go. Happy Friday. Equities on Demand students, I'll see you in 15 minutes. If you're with me today also with Pockets Pattern Pro, I have my final class for the VIP session at 2:30 this afternoon. We will be back next week, Monday and Friday, same time, same place, 9 a.m., youtube.com/Chris Pulver. And next week is a very busy week. We'll be trading stocks and options. We'll be trading Forex. We'll be trading cryptos. Okay, that's it. Hit that thumbs up button for me. Appreciate it. Thanks for watching. Thanks for being here. And adios. Have a good weekend. Bye.